New friends, new opportunities, new partners. EG Tax.
Hey, I'm Esther Golias, the tax lady, and if you're seeing this face, it means it's tax time. And this show's all about making you smarter with your taxes, because we don't want you to overpay. We want you to get the biggest refund possible. You know, we have 30 area offices to serve you. You can go to our website at egtax.com. If you have any questions, we answer questions with real people. We want to help you. Our prices are the least expensive in the industry, and quite frankly, we know taxes. And so that's what this show's all about. And I have you're not Tiffany, are
I'm
you?
not Tiffany.
Christopher Fabian, Tiffany Fabian,
That's me.
their husband and wife, my son-in-law, my daughter. These are, we're the brain trust of EG Tax, and we want to help you. We're going to be back. We're going to take a short break. We'll be back with your questions on the other side.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family. Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family. Hi, I'm Esther Golias, the tax lady, and this is Ask the Tax Lady, and we have our roving reporter out in the field who's going to show you, I don't know.
He's gonna tell us.
We're supposed to ask a tax question. Dom, what do we got?
I'm in graduate school. I have a scholarship that pays for everything: college, books, food, housing, and supplies. The total amount I received was $40,000, but since it's a scholarship, I still don't have to file, correct?
Well, okay, so a lot of people think scholarships are tax-free, and they are, as long as they pay for,
Tuition and related expenses.
right.
But not for food and housing,
Right.
unfortunately.
So that part of that scholarship that this person is receiving would be taxable, right?
Not only taxable,
Line 7,
a kitty taxable.
That's true, right.
If they're under age 24
right,
and claimed by their parents,
Right.
that now is gonna, not only kitty
Trust
tax,
rate.
it's now gets taxed at the trust rate.
That is
So-
the kitty tax.
I know, but I'm saying old law
law.
used to be the
Yep,
parents' rate.
yep.
Now, it's the trust rate.
All right, so we have to unpack this so people understand what the heck you're talking about, Chris. So there's this big law that says that if the parents are claiming as a tax return, on the tax return,
Right.
used to be that people would shift over money to their kids because kids would pay at a lower rate, right?
Yep.
And so then Congress says, oh, no, you're not gonna, you rich people are not gonna get away with that. We're gonna make your kids pay at your rate.
Right.
Right? And that's the way it was. But this year, under tax reform, they said, well, we're gonna simplify this puppy, and we're gonna make the kids that are paying, that have unearned
Kitty tax.
income, which a scholarship would be considered, have to pay not at the parents' rate anymore because that was too complicated. We're gonna simplify it and have them pay at the trust rate, which is like really, really,
High.
really expensive.
Yep, yep.
So this person, assuming that that they're getting claimed on their parents' return, they have to pay on their scholarship and they have to pay at a kitty tax rate, which is a much higher rate.
Right.
Yeah,
which-
and, so you wanna do first?
Sure. So if this is over $12,500, and this isn't counting if they have bank interest or if they have dividends
Right.
too, that all gets into play. You're looking at a 39% federal tax rate.
Right.
That's
That's
why,
staggering.
you know,
What I was gonna say is I sent a letter out to any of our clients in the off-season who were hit with kitty tax, and I can't tell you how many phone calls I received, and they're like, what? So you mean because of the scholarship income, if it happens again, it's gonna be up to 40%? And people were just, their
So now,
eyes were bugging out.
it's not really the scholarship to pay for education and books, that would
Right.
be okay.
Right.
It's the housing and the meals and the other money that they get,
Mm-hmm. Right.
not borrowed money, but, you know, that are really not
Right.
related to the actual education.
Right.
That's what would be unearned income and subject to kitty tax.
correct.
So really, at that point in time, the parents have to say, okay, so for that $500 credit, if this kid's in
Graduate school.
graduate school, if for the $500 credit, and there's not gonna get any lifetime learning
Maybe
credit,
I
right?
shouldn't claim
Maybe
them.
I shouldn't claim the kid,
Right.
right?
Yep.
Yep, and
So,
there's no college
and that's a
credit for New
decision
York.
that this taxpayer has to
Right,
make.
because New York State only has a college credit for bachelor's or
Right,
below, so they
right.
wouldn't qualify
So it
for the
sounds to me
college.
like in this situation, now, if this person claims himself with the high standard deduction, he's not gonna owe much in taxes at all. So it might be in their best interest to file their own return and not have the parents claim them.
And that's the advantage to coming to us. I will try, you'll try, Chris will try, anybody will try the number both ways for the family and see which way yields a better answer for the family.
Exactly right. Good, good, good. Okay, Dom, what else we got?
Hi, I am a remodeling contractor. Last year, I bought a lot of new equipment, like table saws, air compressor, heavy-duty truck, and tools. Am I better off writing everything off in 1 year so I don't pay taxes at all?
Well, you know, that's, you know, the problem with answering tax questions is it can become so broad in the scope, but here's the thing. You can make the election to write it all off in 1 year, but with the new 20% pass-through, you want to understand that if you write it all off, then there's nothing to write off next year, and you are going to reduce the 20% pass-through by what you're expensing.
Right.
So you really have to take a look at future years and kind of tax plan. Would you guys agree?
That's where I was
And
going.
the thing is too, though, you can't, writing it all off is taking the section, just so the listeners understand what it means. We're talking about depreciation, whether to take the full expense now or
Spreading it out,
depreciate it over. Writing it off all now, you cannot create a loss on your tax return. So that's one area we have to look at too, because he bought a ton of stuff this year.
Right.
So what was his income? You know, and then it comes into the tax planning. What's your projected income for next year? Do you need that write-off next year too? Or are you buying even more equipment
Right.
next year? So there's a lot that goes into
Right.
this question.
Right.
It's
Because
not
of
a-
section 179, when you expense it all, can only bring you to zero. It can't bring you further into a loss.
Right.
And so you really want to examine that. And then in this same vein, we're talking about how on the Schedule A, they got rid of business expenses for W-2 employees. How is this fair that a Schedule C can take these expenses, but a W-2 employee
Right,
cannot?
right,
And
correct.
so-
But then let's build on this pass-through thing. So let's say there was 40,000 in equipment that this guy bought, and he has a $60,000 net. So if he did a 179, he'd reduce it by 40, he'd end up with 20, and he'd get a 20% pass-through on the 20, which would be $4,000. But remember, that same $40,000 in expenses, if he spread it out over more years, let's say he takes 20, 20, 20, and 20, then his net profit would have been 40,000, and he would have gotten an $8,000 deduction. So he's actually giving up a deduction that he can't get anymore if he does expense it all. So those are things you have to work with them and find out what they think is the best thing in a tax planning venue.
Mamma mia, try to wrap your mind around
Right,
that.
okay?
Yeah.
All right, Don, what else we got?
I pay for my mother's medical expenses. She lives with me, but has a small pension of $6,000 per year, plus her Social Security of $12,000. Last year, I paid over $20,000 in just medical for her. Can I write it off?
So the truth is that because they're over the personal exemption, which isn't anymore, which is $4,050. So mom and dad, you can't claim your parents if they're over the personal exemption. In this case, it's $6,000 a year. So no, they can't claim them, but the law says you could still take their medical if you fail all other tests. I'm sorry, if you pass all other tests except you fail the income test. And so they could still take the medical.
She can take the medical.
But not mom and dad. And I don't
That's
know if you want to
exactly right.
unpack that a little bit better.
Right. Right. So in other words, medical still deductible if you're paying it for somebody that is not a dependent because they flunked the gross income test. Mom did flunk the gross income
Mom
test.
flunked.
But we paid it for mom, and she would have been our dependent except for that she flunked the gross income test. So therefore, that medical is potentially deductible, subject to the 7.5% limitation.
Right, and if this was the Sterilift, I'm sure that wasn't a relatively cheap thing. So, and that's really not gonna add value to the house
Right.
either.
Matter of
So-
fact, I think
That probably takes away.
Right, that-
So but that's what you have to do. You have to look to see if you made a bathroom handicap accessible, and that cost you $15,000, but your house went up in value $5,000.
Reduce
Right.
it.
That means you're only allowed a $10,000
Right.
medical expense.
Right, even with tax reform.
Even with tax
Right.
reform.
And under tax reform, the medical still stays what it was the year before. The hump that you have to get over is still 7.5%. So this person who's gonna possibly claim her mother's medical has to achieve greater than 7.5% of her adjusted gross income, and that is
And I
no
believe next
change.
year it goes back to 10.
Goes back
right?
to 10.
In 19. So
Right.
it goes back to,
Yep,
in
yep,
19.
yep, yep.
So, okay, so here's the thing. If you're somebody that is completely confused by what we're saying, and we understand that you'd be confused because it's confusing, you can always give us a call at 632-7886 or call any of our branch offices. You can go to our website at egtax.com. Type in a question, we will answer you, but more than anything, don't assume that you understand what we're saying. I've heard people say, well, I heard that Esther said I can take my dog. I might have said you can take a dog if it's a seeing eye dog.
therapy
I mean,
dog.
just, you have to be very careful what you think you heard.
And then just really quickly, going back to that mother and daughter, had she been able to claim her mom, she would have gotten to flip her filing status to head of household. Filing statuses are so important, and
They
so
are.
never
They absolutely
really
are.
assume anything. Don't
Okay, I'm
assume.
Esther Golias, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family. Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gullo Companies put their 40 years of experience to work for you. Call R.J. Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
Hi, everybody. This is Esther Golias, the tax lady from EG Tax. We're answering your tax questions. This is Ask the Tax Lady. And don't forget, if you need the best tax help, we hope you'll consider using EG Tax. Our fees are the lowest in the business. We do everything the big guys do. We do everything the small guys do. I mean, we just do it, and we really care about your tax situation. So this year, when you're thinking taxes, we hope you'll say, EG Tax is where I want to go. I want to join the family. And I'm of course joined in studio with Tiffany Fabian, Christopher Fabian, and we have our roving reporter out in the field asking people about any questions they might have. And so, Dom, what do we have?
Hey, Esther, I'm in BFLO in the McKinley Mall, and I'm here with
Gwen.
And Gwen has a question for you.
My brother works and lives in England. We have a bet that he doesn't have to file taxes if he's out of the country. I say he has to. He says he doesn't.
Okay, well, there now, what's that?
The person who asked the question wins the bet.
Because why?
Because the person in England has to do taxes for worldwide income. So yes, he has to file a tax return even if he earns income in England or France or Germany, no matter.
Canada.
Right, that's true. But of course, there is a foreign income exclusion,
Yep.
right? But you still have to file the return in order to make that election to exclude part of the income,
Right,
correct?
and not to mention, well, he lives in England. How long has he been there? But how much money does he have in foreign bank accounts?
Okay, now you're gonna go to F-bars.
Now I'm going to F-bars. But if he has more than $10,000 sitting in a foreign bank, so this could be the Bank of London,
Right.
okay? If it's somebody in Canada, the Bank of Montreal, the Bank of Toronto. If you have more than $10,000, you have to do what's called the FinCEN reporting.
Which
and you
is
have to-
referred to as the F-bar. We weren't
Right.
talking about a kind of bar, we were talking about the Financial Bureau of Accounting, Registration, whatever.
Whatever.
Right,
But also, not only 10,000, there's also for a single person, there's a 50,000, I want to say, cap too, where there's a form on your tax return you have to file too, to report, this is so stupid, you have to report the same thing.
Right.
So you have to, if you're over that 50,000 overseas, you have to do it on your tax return, and you have to
Is
do
that,
this.
is that
Okay.
51 new? Is that the 50,000?
It's always.
all right, so here's the thing. Does the guy in England or anywhere, any foreign country, and like Chris says, I mean,
Canada
is a foreign country, Mexico is a foreign country, England's a foreign country. If you have income earned outside the United States, yes, it's taxable. Yes, there's a foreign income exclusion. But over and above that, for anybody, if you have income in a foreign country that exceeds $10,000, then you have to do this F-bar report. Failure to do it is a gigantic penalty. The penalties are what, $10,000?
Yep.
Or 50%
Of
of
your highest.
of the
Value.
highest value. So it's very important. So yes, you have to file a tax return. Yes, you may be able to take care of the foreign income exclusion. If you have income in, I don't care if you're sitting in Buffalo, New York with a bank account in Canada and it's over $10,000, you got to do an F-bar report.
And
Go on, Chris, mine is not that
I was
important.
gonna say, and where we see a lot of it, because we are so close to Canada, but we have people who have cottages up in Canada.
Right, and they keep a
And
little
they
extra
keep
money
money
up
up there,
Yeah,
just in case something happens. Bring that down to under 10,000.
Right. Right, otherwise you could
gotta
be
keep
penalized
doing
and you
it,
gotta
yep.
do this report, and it's very, very, very serious. So,
My-
yes, you win the bet, and moreover, make sure anybody that has income in any foreign country, do your FBAR report.
My question is, so say this person made a career of living in England, working in England, we always did his tax return, somebody did his tax return, he did all the foreign credits to get it all back, so he's not paying into Social Security, so when he retires,
There's nothing.
There's
Right,
nothing there.
Right,
Wow.
Yep.
Wow, very, very complicated.
But
Yeah.
maybe he has
A
that
spouse.
country's
Right.
version of
right,
Social
right,
Security.
Right, right.
okay, what do we got, Dom?
I went to Vegas last year and hit it big. I got $40,000, and now I got this statement from the casino that says that I owe taxes on the money, even though I put most of it back into the slots. I'm a single guy. I live on a pension of 15 grand a month, and I get 22 grand a year in Social Security. What's my liability?
Good. Okay, so the gambling winnings is going to affect his Social Security, and congratulations that he won $40,000. And so he really wants to make sure that he keeps track of all of his expenses, including the transportation, which is new this year.
That's exactly right.
To get to Las Vegas.
That's right.
Yep. So what you're looking at.
But he has to itemize to
He
get
has
it.
to itemize, which if you put most of it back in, I'm sure
Be
he's
able
gonna
to,
itemize.
yeah.
But what Tiffany's saying is, on a normal year, none of his Social Security would be
Would be
taxable.
taxable.
Right.
Now, because he has to claim that whole winnings on now page 2 of the tax return, it's gonna make 85% of his Social Security taxable.
Taxable.
Even though he may have lost the full 40,000,
Right.
you still have to show the income on one page and the deduction on another. So 22,000 at 85%.
About
you're looking
$18,000.
About $18,000, he has to show on page 1 or page 2 of the tax return
Right.
now. Boy,
And
this
so,
new forms are
and if
getting
he's
us very
single,
confusing.
and if he's single, right? That means that his standard deduction is only 12,000. Well, actually, it's gonna be about 13,500 because he's over 65.
yeah.
So he's gonna end up with taxable income
Yep.
after itemizing. So unless his itemized deductions are heavy enough, you know.
Right,
Yeah.
right. But it's gonna maybe subtract from the gambling. Say he lost the full 40,000.
Right.
Okay, he
All right,
has
then he's
nothing
not-
else,
then
but
there's-
he has nothing else to itemize. He
Right.
doesn't give to church, he doesn't own a property. So
Sales tax.
he'll have a
Sales
little
tax,
sales tax. But his itemized deductions is only gonna be $42,000, we'll say.
Right.
He still has.
Some taxable income.
He has the 18,000 for his social
Right.
security, the $33,000, 31,000 he's gonna pay tax on that
Yeah.
he never paid tax before.
Right, and he'll be very sad.
And he's gonna, but I never paid, why?
And then he's probably gonna have to pay tax to New York State too on $40,000 of winnings. So that's an event that he's not used to either, is
Right.
paying taxes to New York State.
Well, of course, he can itemize on New York State as
Yep,
well.
he can
Right.
itemize on New York State.
Okay, Dom, what do we got?
Hey, this is Dominic here at the McKinley Mall in the Made in America store. And what's your question for us, sir?
My broker charges me $5,000 in management fees. Where do I deduct them?
So the $5,000 that you used to be able to deduct for the brokerage fees was on the itemized deduction, and that was miscellaneous itemized deduction on the bottom of the itemized form, and that is now gone. So those broker fees of $5,000 are something that he can't claim anymore.
Correct, but on the state of New York, you can claim them,
Right,
but not on the federal.
right, right.
So it's terrible. A lot of people say to me, I can't take my brokerage fees. As a matter of fact, there was a time when I read the law last year that I thought it could adjust the basis of the stock, but it can't.
Right.
So it's just gone. On the state of New York, though, you can take it.
And I know, when we came across this last year in the summer, we were calling the brokers we know going, what are you doing to offset this?
Right.
Because
Right.
people can't deduct it, and their response was, what do you mean they can't deduct
Yep.
our fees anymore?
Yep, that's
Right.
true.
So they
Absolutely
have,
true.
a lot of brokers
Scrambling.
don't know what,
Yep,
so you may see a lot of angry people, and, I mean, we're talking, could be relatively small. I've seen people pay $20,000 to their
That's
broker.
right.
And then
That's
I'm
exactly right.
thinking of a client who has large brokerage fees, and so we know that that person itemizes because of their large brokerage fees. And so usually every year, we say pay an estimated payment to the state you live in, because that'll be an itemized deduction, because of course you're an itemizer. And so now that picture changes, that person isn't really an itemizer anymore. So doing that payment, that estimated payment to the state agency doesn't help them. I mean, it's really very complicated.
Absolutely right.
Yeah.
Okay, so what do you do if you have a question? You can call EG Tax. That's what we're here for. We have 30 area offices to serve you. Our website, you can email us the tax questions at egtax.com. The thing is, if you're watching the show, I think you'll see that there's no such thing as a very easy answer because one thing affects another, and especially now this year with the federal having limited deductibility and the state opening up the barn door saying you can deduct it, that you end up with two completely different types of tax returns for the same income and expenses. Okay, I'm Esther Golias, the tax lady. We're going to take a short break and we'll be back on the other side.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family. Why is it when we think of our family, we always do what's best for them? Like when there's a problem with your kid's teeth, you call the orthodontist. Problem with the car? Call the mechanic. So why, with the largest tax law change in decades, would you even think about preparing your own tax return yourself? A mistake could cost you thousands. EG Tax has studied these tax law changes since their inception. We're going to work hard to make sure you get the biggest refund possible. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gullo Companies put their 40 years of experience to work for you. Call R.J. Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
Hey, I'm Esther Golias, the tax lady. We want to thank you for watching us again on WBBZ Ask the Tax Lady. Tiffany and Chris are here at EG Tax along with me. Our phone number at our corporate office is 632-7886. We have 30 area offices to serve you. We offer everything everybody else does. When you see those commercials, you can say, they do that at EG Tax.
Offers and compromises.
Yeah,
too.
oh my gosh, we do everything. And the thing is, you know, I would like to say that we do it better and we care. I mean, we really do. We're local. We're local tax experts. Our fees are the lowest in the industry, and I will tell you, if nothing else, before you do it wrong, give EG Tax a call because we're great for a second opinion, and there's no charge to talk to us. Until next week, I'm Esther Golias, tax lady from EG Tax. Hope to see you in one of our offices. Thanks for watching.